All right, let me begin by saying hello and welcome to each and every one of you. Doug here with thelincolnlist.com. I want to welcome you to another weekly edition of Stock Market Mutterings, where I always say I'll take a grope in the murkiness, try to make some sense out of the market for you, and I hope it puts a little bit of money in your pocket and give you some quality trade setups. This will be for the 13th, and as always, guys, if you need any help with your trading, somewhere on this screen will appear a link. Feel free to click it and join us any day that the market is open. I'm going to start with the Qs this time because I'll tell you what, I don't know what else to say about this thing. I mean, it just seems like it's deja vu every single day, right? This thing just keeps going up. It's like you wake up, it's up. Every day, it just keeps going higher. Now, I know at some point this is going to end. But one of the things I have learned definitely about trading, for sure, over 20 years, if I can say there's one thing I really learned about trading, it is totally dumb to try to pick tops and bottoms. Because you can't. I mean, what's overbought can continue to be more overbought, and what's oversold can continue to be more oversold. And I think if you're trading for the first time, or even if you traded for a long time, sometimes we forget, right? We get stuck in these longer term trending markets and we kind of forget what happened. But if you think about the last 6 months in the stock market, you saw both extremes to both sides, right? You saw this 30% correction across the board over this COVID, which seemed to happen just in about 1 month's time. And ever since then, it's retraced all of that, or at least most of the markets have done that. There are a couple of that have not. We'll talk about those in a second. But you saw this epic retracement where it came back, especially the tech stocks. And it looks like right now that we're kind of reliving, for those that remember the time, it feels like we're reliving 1999 and 2000 all over again. I thought back then when I was trading that was going to be a once in a lifetime bullish event where everything was just all centered around tech. Back then it was .com. Anything .com was just being consumed regardless of PE ratios, regardless of fundamentals, regardless of income. It made no difference. They just stampeded that stuff every single day. Now, by no means am I saying right now that we're going to re-enter a phase like that, but there certainly are similarities. Now, I should kind of retrace that a little bit. A lot of these tech companies are great companies that make a lot of money. Yes, they're short-term overvalued and overbought, but, you know, to each his own. I'm just kind of making a resemblance there that feels like mentally, you know, not chart-wise too, but mentally, it feels like we're living in that same period where it's just, you just wake up every day and buy some tech and do it all over again, like deja vu. I mean, look at this thing. The Qs are just absolute insanity. And, you know, the thing is it's this way until it's not this way. And I'm kind of talking to the new traders out there and the struggling traders when I'm saying it's not our job to pick tops and bottoms. It's not our job to complain about something that's overbought or oversold. We can just simply take what's in front of us and trade it, because all of us, all the people that are watching this right now, you guys at home, all of us and me included, we can't do anything to this Q. We can't all get up tomorrow and say we're not going to buy it because we want it to go lower and we all short it. It's not going to do a damn thing for it. The volume's too huge for that. So it's something that's out of our control. We just have to trade with it. As I move through this, of course, a correction could come by at any time. I'm not saying there's going to be a market crash, but a 2%, 4%, 5% or something like that is definitely in order here. But I'm not going to short that unless I see something really clean and clear that has good risk to reward. I'm just simply not going to take that chance right now because it seems stupid. And what we saw this week was a lot of opportunities for selling. Like, we had 3 or 4 solid washouts where the intraday action just looked like it was done. I mean, some really aggressive selling, but every single time. I mean, look, like here you had Friday's action just beginning the day, just sucking shorts in, just confusing people, trying to feel, okay, look, I'm at the highs. I'm going to start dumping right at the open, only to not just, and here's the thing with the market, not just come back. It doesn't just come back. Like, you know, you get knocked down, you get back up. It's like they get knocked down, they get back up, and then go straight to the moon. It's like, it looks like it's going to sell off. And then not only does it go back to high a day, but it just ends up getting bought all the way through. And again, there was several circumstances this week where we saw that type of behavior. Here's another day. Midday selling, a lot of flushing, a lot of aggressive selling on a lot of volume, only to be bought back up before the day was over. Here it happened the day before like that, just a straight dive bomb out of nowhere and comes straight back up. I mean, it was like repeating, selling off late into the close. I mean, there were opportunities for the bears to take control of this selling and move it forward. Not having it. It didn't. Now, Yes, at some point this is going to stop. At some point this will not get bought. But until that, you play that. If you get an opportunity to pick it up on the dip, you pick it up on the dip until it tells you shouldn't have done that dip. That's what you should do, right? So just an amazing move. Now, let's move away from the Qs for a second because we have to think maybe some sector rotation is in order here. And I want to look really at the SPY because this thing is about ready. This piece is just about ready. Let me put it up here on the screen. We'll expand it just a little bit more for you guys. I mean, look at this consolidation that it's been in and look at the resistance points that it's at. Now, this little, let's call, for lack of a better word, let's call this little correction the market had that began at the beginning of June. We had a gap down, and since then it's been kind of shuffling back and forth. So every while the market does this. And if you go back to the market mutterings then, you'll remember that I had specifically said it takes a month or so for this stuff to wash itself out. It's going to remain volatile, and then eventually it will not. And that's what you're seeing here. You've spent about a month just kind of trading sideways, back and forth, washouts here and there, buyback. But overall, it's held the 200 moving average here. And that's where we sit right now. You know, this 200. Well, that's not where we sit, excuse me. But you got support there. And now you're sitting at this resistance of 317.80s. Looks like it's going to go right on back and retrace that initial part where it sold off, as it always has done eventually. Now, I bring up the SPY because when you're looking at the Qs and tech stocks, you're buying a lot of that stuff already at all-time highs. To me, that doesn't mean that trade doesn't work, but it means that you're kind of you're stealing value. We've discussed this before, that your job as a trader, especially an intraday trader, is try to identify what stock's going to give you the most value. And when you're pressing things at all-time highs on multi-day run-ups, that's good if you're already in the trade. But if you're not an investor and you're day trading and you're looking for new stuff, it's tough to sit here and start buying Netflixes and Teslas when they're up so much. That doesn't mean they won't go higher, but it's difficult to assess value. So you start looking in other areas where value and alpha might come, where you can capture larger moves with a lower amount of risk. Because you do have to take into consideration at some point you might catch it on the bad bounce, and the day you decide to buy the Tesla breakout, the thing reverses on you for $140 or something silly like that. It's possible. So these SPYs look like they're going to make that move. They have some range. So when you look at things like the Dow, the YM, and you look at the SPY, the SPY here, this rally has been fueled by tech and the Qs. The SPY is well off of its all-time, not well off, but it's about 140, 50 days or something like that since it's made an all-time high. Dow, the same thing. They have not recovered all the way back, whereas the Qs have. So again, just kind of pay attention for that sector rotation. I mean, I don't want to try to make this out to more than what it really is, because until I see something different, I trade no different. And it's been good over the last couple of weeks, but I'd like to sit here and tell you that I had something fancy, right? Like the other people would tell you, or that I knew something that the world didn't know, but I'm not. I mean, I'm not that intelligent for this kind of stuff. I just trade what I'm seeing, right? Because every philosophy I come up sometimes doesn't make any sense. I just trade what I see. It's been working for me now for 2 decades. You know, it's how I roll. And basically, I'm looking at anything, any of these big names that pull back. You dive in the morning, I want to buy you. You know, like let's take a look here. You had some Tesla here we were working with on Friday. You know, let's move the intraday charts. Where you get that sell-off, you get that nice little dip early in the morning, some action, solidifies support, and then bounces. Now, I had no idea. Again, I'm not going to act like I'm super brilliant here. I had no idea when we got into this thing that it was going to go like $150 nonstop. I had no idea. No idea whatsoever. But it did. It did. What are you going to do? I like the way this, let's see, AVGO looks. Got a really good daily chart on AVGO right here. Let me open up the daily chart. You know, looks like it's ready to break this range of 324. And the same thing, you know, we talked about this as well. This was the fundamental behind the check mark pattern, is that if you're able to get into something on the dip, you have a chance for that thing to re-rally back to the highs and then move on. And we saw that with things like DocU. Pull DocU up. And I mean, I'm talking about the same stocks every week. Here's a beautiful check mark. Look at this one. Just coming right on down in here. and then bouncing right back up. Now this one was unable to make some new highs, but still there was value there. And I also think this Lulu looks pretty good. Right here, same thing. It's consolidating nicely on the daily, and we had this really good chart here on Splunk, SPLK, where it did the same thing. A really nice check mark. Then it consolidated for a little while and then put in this late day ramp. These are beautiful trades. So this is what I'm looking for as a snapshot. You're picking a strong stock on the daily chart like this, something that's already in this massive run up. And you're just waiting for the pullback. Now, the reason why I feel that's better than the breakout, obviously, it gives you a chance to collect more money because you're in a better spot. But you're also in a better spot for risk versus reward, right? You're in a situation here where you can get good value on that trade. So if you're wrong, then it's probably a bad spot to buy that anyway. So if you're wrong, you're not going to lose a lot of money, but you're positioning yourself nicely throughout the day that these rallies that we've been having midday, they've been huge. They have been huge. And I think you have to do that now, and you have to start using some stops and some risk in place, because you never know at what point the sell-off that we see does not get bought back up. And I mean it soon. We're going to see that. You know, I don't care what you got going on. I'm not trying to be the negative person here. I'm just simply saying at some point, you know, we've always said the market will drive prices up as high as they need to make them unattractive. And they'll drive them as low as they need to make them attractive. So you're in this place, well, they're going to keep buying it. They're going to keep running it up. But at some point, the powers that be, the trader Illuminatis, will say, we ain't paying this anymore. We're not going to continue to buy back our stocks, or we're not going to continue to chase these elevated levels. We would like to buy them on a pullback, and you're going to see one. That doesn't mean market crash. That just means a pullback. But again, you know, it's impossible to time that type of an event. If you could, you know, your life would probably be a lot different than it is right now, wouldn't it? So I'd say the last couple of weeks, they've been really good. They've been really good with trading, and it's just doing the same thing. It's just picking up some dips here. I'm not trying to complicate this thing any more than it needs to. And yes, the market right now it's giving wind at your back and making this a little simpler of a trade, but that will change, and we'll need to be prepared for the day that it does. But until that, you got to trade what you see. So going forward, no change in my plan. Love Lulu, love Splunk, love Apple, love Facebook, love, I think I said Lulu already, but I'm going to say Lulu again. I love Twillo, TWLO. I love PAYC. I love all these stocks. If I wake up and I see them down on my list, I'm going to be looking to buy those until that strategy stops working, and then flip to the short side. But for right now, we're just going to stick with that. So anyway, guys, I want to thank you for watching this video. As always, if you need help, feel free to reach out to me, support@thelincolnlist.com. Also, feel free to trade live with me. Remember that link. It's also down in the comments section. Until next week, trade them well. Take care. I'll talk to you then.